All right, so go figure, $4,000 gold. All right, we are a business show, and gold is at 4,000, and I have no way of explaining it. We're going to bring in Marc Sumerlin, former White House economist, and E.J. Antoni, Unleashed Prosperity Senior Fellow. The first thing I want to do is put up on the chart, on the full screen, we have the Goldman Sachs Commodity Index, and we have gold, all right? Now, you look at the left side, gold, the commodity index, you know, it's zigging and zagging. It's gone nowhere year to date. It's basically flat. The gold index, on the other hand, or gold, the price of gold, just keeps rising. So I must confess, I don't understand it. I'll add to this, these are my editorial biases, but nothing seems to back up the gold. For example, the 10-year is 4.10, 4.11. It's not going up to 5 or 6%. The dollar is holding. The DXY, against other currencies, is holding 98 plus, holding around there. Nothing much is going on there. Oil prices are actually, if anything, coming down. OPEC is loosening the spigots up. So I don't understand it. All right, go ahead, Mark. You start. You got to explain to me. A lot of people. This is a front page story.
Yep.
$4,000 gold.
Yep. Great. Well, thank you for having me, Larry. So there is one extra buyer for gold that we don't have for other commodities, and that's central banks. And so what we're seeing is at the margin, a lot of the demand is coming from banks, and it's starting for something that has nothing to do with the U.S. economy. It started with when the assets for the Russian central bank were frozen, right. That central banks decided that they wanted to hold sort of less fiat currencies and more physical gold that couldn't be seized in banks. And so we see this sort of just constant demand out of the central bank world for gold.
You think they're still buying the central banks?
They're still buying it. It started the rally. Now it's definitely broadened out. But to your point about where you look for clues to see what this is, we can tell it's not anti-dollar. And the reason is if we look over in the crypto space, which started, they say they're anti-dollar. And you look at them, and what did they do when they self-selected stable coins? They said, we're going to peg to the dollar. And we see enormous demand around the world surging for stable coins, which are tied to the dollar, which tells you gold is not signaling any problem against the dollar. It's something else that's going on.
All right. So besides central bank, that's a good point. We took, let's see, about $300 billion out of the Russian central bank, and it's over in Brussels. Someplace, and we ought to break it up and use it to finance Ukraine, but that's a different segment. EJ, do you have an explanation for gold?
Well, I like a lot of what Mark said, and I would throw on top of that, gold does not always move with the news. In other words, you kind of have that bullwhip effect. Let's not forget, it was back under the Biden administration when inflation was really ramping up and gold really wasn't budging. And the Wall Street Journal runs a headline saying, well, gold is no longer a safe haven. Right. And I think it was like $1,700 or $1,800 an ounce back then. So clearly that wasn't the case. And maybe one of the things that we're seeing right now is that continued flight to inflation protection, because investors are essentially saying, I don't want to get burned again like I did the last 4 years.
If that were true, bonds would be at 5, not close to 4. If that were, and you would see broad commodity indexes booming. You'd see copper and oil and the whole complex, soybeans. They're not. You can't, I mean, I'm not anti-gold. I watch gold very carefully, but it has to be watched in the context of the overall commodity picture, the overall inflation picture. I don't think inflation, I mean, bonds would have to validate gold. Some of the CRB's not doing it. The Goldman Sachs thing is not doing it. The dollar's not collapsing. I mean, who's Bunker Hunt? Do you remember Bunker Hunt? The silver bubble in the early it was 1980, 81, I don't know. And he was a genius, Bunker Hunt. I'm not here to pick on the Hunt family, Lord knows, but he was a genius until he wasn't. And then all of a sudden it deflated and he got clobbered. I believe he went bankrupt or some such thing.
He did.
I mean, you want to say like the dollar's losing ground against gold, but but it's not losing ground against other stuff. That's the part that I find somewhat vexing.
But there's that monetary speculation to gold, right? Like what Mark was talking about with all these central banks buying gold. They're not doing that with other commodities. So because gold and silver to a lesser extent has that unique unique monetary capability built into it, I think that probably explains some of this run-up that we're in right now.
Well, I would go back now. There's a big Milton Friedman part in me. So, and I'm reading Dan Clifton from Strategas. The Fed is still shrinking its balance sheet. What did he say? Reserves are down to $3 trillion. That's a good thing. I mean, they're up to the balance sheet was up to almost 10 trillion at one point. The money supply, I love to read my friend Scott Granis on the West Coast. The M2 money supply is growing at 3 or 4%. It was growing at 30% 5 or 6 years ago coming out of COVID. So I can't even find a monetary explanation for it. I mean, now the question is, and we got to get up, do you sell gold? I mean, is it just too bloody high? Yeah. As stocks, I'd rather own stocks. Okay. Stocks with profits, real profits, and tax incentives. Sorry.
No, no. First of all, I'm not selling my gold. But I think that we're talking a lot about the U.S., but there's a global picture, and a lot of the investors I talk to outside of America think that debt around the world is just too high. When they look at it in Europe, they look at it in Japan, and what they're afraid of is that in a lot of other countries, they're going to have to choose inflation. And so it might not be inflation in the U.S., but gold can go up if people are expecting it in other countries as well. And the demand is foreign, I think, right now.
You've raised a lot of important points, particularly international points. But E.J., I'd rather, profits are rising at a double-digit pace. Profits are the mother's milk of stocks. That's the base. And interest rates are coming down, and Trump has given business a whole bunch of incentives that they're putting it to work. I know the stock market fell 100 points today or some such thing, but we've had a fabulous rally, and I think stocks are the place to be.
Better tax policy, better regulatory policy.
Yes.
That's bullish.
All right. I'll let the foreigners own gold. Anyway, Marc Sumerlin, E.J. Antoni. Thank you very much.